keep on. Yo, welcome to August 7th, 2024 live stream. Thank you guys so much for joining. And yeah, I'm actually gonna turn off the webcam just for today. But yeah, if my voice sounds different, I lost my voice during a trip and it's yet to come back. So yeah, you guys just gonna have to bear with it. Alright, so coming into today, this is what the daily chart had given us this past since yesterday, right? We had this bearish closure here. However, during the Asian and London session, we did not respect bearish PD arrays. We didn't respect any of the bearish PD arrays, and we actually began to drive higher here. So this morning I am anticipating for us to take out previous day high. That would be my draw. Notice how I don't believe we have any news today, so yeah, we have no news. Alright, we don't really have significant news this week. So I feel like we could probably just end up taking previous day high. I'm not expecting too much of a price range. However, if I were to think this as a weekly template, we could either, this is what I'm anticipating here, we either create the high of the week on Thursday and then create the high of the week on Thursday and then start to continue lower, or we could consolidate for majority of the week, for the rest of the week. And then notice how whenever we close here, we create this weekly fair value gap. If we create a weekly fair value gap, I would anticipate for us to retrace back inside that weekly fair value gap to continue lower. But yeah, those are my like two scenarios that could play out here for the higher time frame. I drew up the premium discount of this price range here, so prices actually traded up into a daily fair value gap here and then displaced lower. So from that swing high to the swing low, I drew up the premium and discount, and you know, prices could retrace back inside the premium of this range here. So ICT states that you always want to be selling in premium and you always want to be buying in discount. So they said there's also three things that prices does. It rebalances prices, takes out sell side or buy side liquidity, or inefficiencies buy side, inefficiencies sell side, buy side, and discount and premium. So if we do end up taking out previous day high, I would anticipate for us to retrace back inside the premium of this range, which is denoted as the 0.5 level, the halfway mark. Anything else I do want to note out? So if we are to continue higher here, I would like to see us respect this hourly FEG. We should respect that hourly FEG and to continue higher. I mean, we are in a pretty, like, it looks pretty consolidative, to be honest. I mean, we dropped 1,000 points during the open on Sunday and Asian session. So yeah, so like I said, objective coming into today is to take out previous day high. And how far can we go? Most likely the premium of this price range right here, from swing high to swing low. There's that. Excuse me. So here I would have liked to wait out the first 30 minutes of the day. That's like just one of my rule sets, is that I wait out the first 30 minutes to see what prices does. But yeah, I'm just gonna like to wait out, see what prices does. If we take out previous day high during the first 30 minutes, then there's that. I honestly don't really care. But if previous day high is still intact, like I said, by 10 a.m. that would be my draw of liquidity. Let's play some chess games just to get the brain warmed up. If I lose this game, I'm doing 10 push-ups. So there's the opening bell. So like I said, if we end up taking out previous day high during the first 30 minutes, then I would reassess my narrative and see what other draw liquidity we can attack. But yeah, I'm just gonna sit out the first 30 minutes. So we took out previous day high here on NQ. So I would like to note that. So watch for this premium level here. This 0.5, I would anticipate for prices to attack here. on now. I actually can get a fork if I just get into the square. Let's see if I noticed that actually. Oh, he doesn't notice that. Nice. Well, actually it's not really a fork because he could just move up here. You just move here, and then I go here, and go here. Bam. Alright, so we have London lows still intact, Asia's lows as well. Just watch how we react there. His pawn structure is really dominant. Oh, he didn't here. This. Jeez, I'm just getting wiped out with. Fudge. Oh, I didn't even see that. Oh, that's 10 push-ups. That's 10 push-ups. Alright, so see, do we tap the 50% yet? Not yet. Algorithm 361. there's that equilibrium or premium of the range that we just tapped. So that was the draw. I need to develop my pieces. Like, I literally had them developed and then now I don't have them developed anymore. Wait, what allowed that? Oh, that's tragic. Another 10 push-ups. Okay, I think that's probably enough of chest for me today. Oh, I was... The blunders, jeez, I blundered a lot. So there's a, prices digged up into premium of the range. Now it's just like, not too sure. the question now is how far can we trade, or how high can we trade now? This you would need some standard deviations here. Can't really find a projection that aligns really well with the prices here. This could work. So we have -1 here, -1.5. But reoriented in a premium PV array right now. So what I mean by that is this daily fair value gap should be respected for us to continue lower. So I'm not really anticipating for us to go all the way back to this -2 standard deviation here. All right. Any longs that we do take, however, today will be like intraday models, because on a higher time frame we are trading inside a daily SIBI, so longing inside a daily SIBI is not the best option. But If I understand it's just a lower time frame model, then I would be able to take it. Like here, look on this 4 hour time frame. We can anticipate for us to at least take this high. That is what I'm trading based off of. So we just took out -1 standard deviation there. Watch out for the midpoint of this daily SIBI, the consequent encroachment. We have about 8 minutes left till the opening bell here. I do want to go over my risk management plan today, and I also want to go over my pros and cons from last week. Before then, so my pros and cons here. So this week, or previous week, sorry, I understood that higher time frame narrative and was able to position myself into it using a 15 minute fair value gap. I usually use sub 5 minute fair value gaps as an entry pattern because I usually trade with the 15 minute power of 3, but in this instance I traded with the 1 hour power of 3 and the 6 hour power of 3 because I understand how fractal prices can be. So this was actually at July 30th trading day. So if you take a look at the 6 hour here, we closed in the 6 hour pretty bearishly. We saw previous week's low intact, so that was our objective, our higher time frame objective. We created this 15 minute fair value gap here, and we had this 30 minute breakaway gap. So I wasn't anticipating for prices to retrace back into here. And we had time frame alignment as well, 15 minute, 30 minute, 1 hour, and 6 hour low. And we leave the 15 minute, we leave that low intact, we retrace back inside the 15 minute fair value gap, and we displace lower. So, you know, accumulation, manipulation, and then distribution. You can kind of see it there. So that was one. So understanding, that was one of the pros I did last week. So I understood how fractal prices could be, and I understood the higher time frame draw of liquidity. During July 29th trade, I was able to answer the question, why did we create this power of 3? I knew the reason why we created it. So 20 in that here, we created this bullish 15-minute power of 3 here after coming into the 4-hour fair value gap consequent encroachment. We also created a 3-minute fair value gap, and whenever we retrace back inside that 3-minute fair value gap, I was able to enter a trade. And yeah, I think that is it for my pros at least. So like I said, I understand the reason why we created the power of 3 and how fractal prices could be. One of the cons, this is more of like a technical software issue, but I'm gonna have my TradingView or TradeOvate account ready at all times. So there I just tested out my TradeOvate, it's working. Like I said, I'm like a sniper, so I always have to be ready to take a shot, so I must be prepared. One cannot perform if he is not ready, externally or internally. So externally I have the TradeOvate account ready, and internally I mean, I'm ready to pull that trigger when the trigger's needed to be pulled. But yeah, that was all my pros and cons from previous week. I'll do another pros and cons at the end of this week. So the risk management plan that I'm going to go into today with is I'm going to be trading normal size. There's not really a reason for me to be trading lower size here, but yeah. So let's say I were to take my first trade of the day, right? And it's a 1-to-1 risk to reward. I'll have a $480 maximum stop loss as for my trade, and $720 if it's a 1 to 1.5 risk to reward or higher. So let's say it's a 1 to 2 risk to reward, then I'll have my stop loss set at 720. And that really, that plays it's a big factor in the way I trade, because I use micros and it allows for better position sizing. Second trade, let's say I win my first trade, I make 500. I'll be only risking 250 the second trade. So if I win my first trade, I'll risk half of it. But let's say I do take a loss, right? I take a loss during my first trade, and I'll risk 240 dollars as my maximum stop loss if it's a 1-to-1 risk to reward. But if it's a 1 to 1.5 or higher risk to reward, then it'll be at 320. Third trade, if I win my second trade, let's say I win my second, it's the same concept. I'm only going to be risking half of my profits. So if I make, let's say I make 260, then I'll be risking only 130. But if I lose my second trade, then I'll risk 120 as my maximum stop loss, and if it's a risk to reward that's 1 to 1.5 or higher, then I'll be risking 160. And yeah, that's gonna be all for the numbers wise. At least you guys can take a screenshot of this or whatever, but there's that. I'm not going to be taking any models that's below a 1 to 1.5, sorry, that's below a 1-to-1 risk to reward ratio. So I'm not going to be risking $1 to make 50 cents. Risk to reward should be set to where I take my first partial and break even, not set at where terminus is. When I'm taking my partial, I take off half of the position size and I move my stops to break even. So there's 10 o'clock opening bell. So I do want to note out that opening price actually. Here it is. Alright, let's go back to it. And whenever I do take a partial, I'm taking off half of the position size, and I'm going to move the stops to break even. So let's say I take a position size of 20. Whenever my first partial gets taken, I'm taking off 10, and then I'm going to move my stops to break even, and my next take partial, I'll take off 5. So I'll keep taking off half and half and half until terminus is hit. And that's it for my position sizing video, or not video, but little recap here for the live stream. And I hope you guys find that meaningful. This always happens. Like, things just keeps. So here you can look on NQ. This high right here on NQ is that 4-hour high. So I'll show you guys what I mean when I get back to my main chart. But this 4-hour high would be my next objective for the morning session, at least. This 4-hour high. Alright, so look at that, look at this 4-hour high right here. This 4-hour high would be my morning objective, because just based on how we close in that 4-hour candle, I can anticipate for us to take out that 4-hour high. But like, even though like I'm anticipating that, is there an entry model for me to enter? There's no entry model. Prices didn't even retrace at the 10 o'clock open. We just instantly priced up higher. This is, if you take, like, I don't know how to explain it, but yeah, I wouldn't take this. I would have probably waited for a retracement of some kind, and then get a little bit more confluence by, bullish power of 3 to target that 4-hour high. All right. So it looks like we retraced back inside this 15-minute fair value gap here. We almost have an immediate balance on the 30-minute, but we don't. So let's see what we create here after we retraced inside this 15-minute fair value gap. Look at this price range though. I do want to just note that we literally moved 338 points. Like, this is not normal. 338 points is significant. That's a significant amount of points. I feel like there's this move up here. There's not willingness like compared to this move down. It's like the amount of down close candles in the move up doesn't signify strength. And unless we completely go through this daily fair value gap here, taking any longs is going to be a little bit riskier on the higher time frame. Once we get above this daily fair value gap on the daily time frame, then taking longs would be a little bit, it'll be less, how do I phrase that? You'll be more on side whenever you do take longs. But because we're trading within a daily fair value gap right now, it's just not probable to be longing inside a daily civvy, because who knows when we'll trade lower. So taking any longs right now, you have to understand that you have to scalp, and on the higher time frame narrative, we are still in bearish order flow. And yeah, so like, let's take a look at how fast this move down was. So that was about 83 days, right, for the price move up. How many days did it take for us to go down? 25 days. So that was about a quarter. We went significantly lower in such a fast amount of time compared to how long it took for us to go higher. Just something to keep in the back of your mind. Let's see how long I've been streaming for. 49 minutes. Okay, so if we do end up taking out this 4-hour high and without giving me an entry, I'm probably just going to close the live stream off for today. I know it was a little bit early, but yeah, there's just really no need for me to be looking at the charts right now, because I'm waiting for prices to give me that, show me its hand. Right now, it's not really doing much. Like, yesterday we basically just consolidated the entire day. Today we finally broke out of that range we took out previous day high, and then we traded back inside the equilibrium or premium of the light price range. So now it's either will we, displace lower, or will we, close above this daily fair value gap. And like I said, this daily fair value gap should be respected if we are going to continue higher. So I'll just stay on the 15-minute time frame, the bellwether chart, and just watch what prices does at 9:15. I would have liked to wait for a candle closure here on the 15-minute time frame before I decide to take anything. Yeah, there's just no entry pattern. I'm not even gonna try to force anything here. There's no entry pattern to attack that 4-hour high. Requiring a entry pattern here, it really prevents, like the amount of trades I take, and it really signifies. Damn, why can't I significant? Is that even signify? It really signifies the the quality of my trades. Quality over quantity is what I'm trying to aim for whenever I do trade. Some people like trading a lot. I prefer trading only A+ setups or A setups. Ikigai. Ikigai. What's up, brother? What's up, brother? Oh, I just sold a jacket. Nice. See, so the reason why I didn't take that, like, there's no, you see why I didn't force that 4-hour high to be taken? That prevents any, like I said, any bad setups. Because there's no entry pattern for me to target that 4-hour high. So that just, like I said, it just reinstates what I say again. If I follow my rule sets, I'll be rewarded for that. And I follow my rule sets. Oh, whoops, I did not mean to do that. We are starting to get some sort of, displacement back here, this range. So we'll see how we close on the 15-minute. We still have about 10 minutes left, so there's not really a need for us to rush here. Ikigai. let's wait and see how this 15-minute candle closes before really, you know, being hasteful and taking a, you know, a trade off of that. We still have 8 minutes, so just watch and see what we do in 8 minutes. 8 minutes. Five minutes left to the closure. So like I said, that's why I like waiting for candle closures, because at one point this candle here was a full-blown down close candle, but waiting for candle closure prevents any hastefulness. 30 minutes till the closing. I meant not 30 minutes, 3 minutes. Alright, 1 minute left to the closing here of the 50-minute candle. And it appears that we don't have any sort of entry pattern to take this trade. So we'll probably just sit out here. So let's reassess. We came in to took out that negative 1 standard deviation, failed to take out a 4-hour high here, and so what we could do actually is attack that discount of this range from low to high. So let's see what we do in this 30-minute. Yeah, there's no PD raise that would support the idea of us going lower. We did, however, close below this 50-minute fair value gap, so that's a sign of bearishness. We still have 30 minutes left till this at 10 o'clock, so at this 10 o'clock. Prosciutto. This one's a little bit too threatening. Maybe I don't owe this. Yeah, there's really no need for me to vote that. .80. Yeah, that seems to be the... That one's nice. Ikigai. Let's watch this. I do want to explore some more fonts though. I kind of like this one. Shipori. It looks just like super consolidative. Like, see, there's just, like, it just looks, I don't know. I don't like these conditions. Well, in about 20 minutes, if there's no setups, I'm going to turn off stream. No point in really watching this. Is there, like, let's see if there's Arabic font. I don't like that one. Nah, I'd rather stay with Crimson. But let's see what, like, Rakas would look good with regular this one, but not with Japanese font, not with Japanese letters. You're gonna go đi thằng đó? Alright then, buddy. Jeez Louise, this is super consolidative. With this next 30-minute candle, we'll see what we do create. New. So let's see if we take out this hourly candle's high or low. It's a lot of chop, but with the way I trade, it prevents it. Still 13 minutes left. When we take out that 4-hour high, then we can base our trade off of the hourly high. But yeah, we'll see if we can attack, maybe consequent encroachment of the daily fair value up here, even lunch highs from Friday. Lunch highs actually aligns with the negative 1.5 standard deviation. what a peculiar position, situation we're in here. So if I were to take this aggressively here, looking on the 10-minute now, we could probably take out this, tap into this 10-minute FEG. Minute FEG, and then to continue lower, or I'm sorry, tap into the 10-minute FEG to continue higher. My bad. But it's just, look at this 15-minute time frame. This 15-minute time frame is telling me that we're probably going to continue lower. Based on this 30-minute time frame, I can anticipate for us to attack this 30-minute high, but based on this 15-minute time frame, it doesn't look like we're going to attack this 15-minute high and attack this 15-minute low first. On the 1 hour time frame, it's so wonky. Now it's up to me to define if I want to take this risk or not. Like, do I want to risk like 240 on this trade? If I were to take this, they say I take it. I mean, you contract, 3 contracts. I mean. I'm not a fan of that, but yeah, I'll just watch. I'm probably just gonna paper trade this, or just tape read this here. Because like I said, on the 30-minute, I can anticipate for us to take out the 30-minute high, and there's also a 10-minute FEG that supports the idea of us taking out that 30-minute high. But on the 15-minute time frame right now, it doesn't appear that we're bullish, and it suggests the idea that we're gonna go lower. So yeah, I don't know. See what the dollar is doing. So this is a hypothetical trade here. I wouldn't have taken this. We just don't have time frame alignment with the 15-minute and 30-minute, but yeah, it's just a hypothetical setup here. Because I mean, I would have been trading maybe like based off of the 30-minute power of 3, but the 15-minute is not aligned with it. Another confluence is that we're buying below the 10 o'clock open. So I guess that's something that we'd want to watch for too. And we're also buying below the 11 o'clock open. But yeah, this is a hypothetical trade setup, like I said. So it does appear that we we are going to take out that 30-minute high. Like I said, it's a hypothetical trade. Reason why I didn't take this is because of how the 15-minute was looking, and it was in alignment with the 30-minute. Because the 30-minute, it suggests that we're going to go lower or higher. I mean, higher time frame holds higher power. But on the 15-minute time, it just, I don't know. Stops would have probably been moved here now, to be honest. To the swing low, to mitigate risk. Alright, chat. I'm probably gonna close the stream here. It's getting a little bit late. I'm gonna go eat. Yeah, I'd rather just leave the charts here for today. I'll call it a day, and I'll come back. I'll be on tomorrow at 8:20 a.m. Be here or be square, or be there or be square. And yeah, I'll catch you guys next time. Peace out. Bam.